So guys, the other day I was texting with my friend Harris, who many of you probably know. He's been on the channel a handful of times. We were talking about Williams-Sonoma, who saw a crazy jump earlier this week after reporting their quarterly earnings, like over 20% in one day. It was pretty insane. But when we were texting, after talking about some of the craziness we've seen in the market lately, Harris asked me a really interesting question. He basically asked if the market right now reminds me of what happened in 2021. Now, I don't know if you guys remember 2021, but it was a crazy year in the stock market. I mean, just in that one year, the S&P was up almost 30%, and my portfolio was actually up even more. I was up almost 32% for the year. And overall, 2021 was a great year for everyone. We were all making money hand over fist that year. And with that, going back to Harris's question, yeah, some of the things that we're seeing in the market right now remind me a lot of what we experienced in 2021. And I'll be honest, it's kind of scaring me a little bit. I don't quite know how to feel about it. Now, if we take a look at my portfolio's performance over here, we can see that I'm having a pretty good year, guys. I'm up 21.5%, and this is the S&P 500 right here. I'm not trailing it by too much. The S&P is up, close to 24%, so there's maybe about a 2% spread here. And if we go back just a little bit farther in time, going all the way back to basically this time last year, at the start of November 2023, which is, at least for my portfolio, this is where a lot of the gains really started. After this point in time, my portfolio really just took off, and it looks like the S&P 500 was the same. In this time period, my portfolio is up 32.5%. The S&P is up almost 35%. So once again, about a 2 percentage point spread here. Really nothing too crazy, maybe 2.5%, we'll call it. So overall, this last year has turned out to be pretty similar just in terms of performance compared to 2021, which is good. It's good to be making money, but at the same time, part of me does feel like these gains have just come way too easy. And I'll tell you why that concerns me. But before I do, guys, that portfolio performance chart that we were looking at just a moment ago was from Snowball Analytics, which is actually the sponsor of today's video. This is a really cool portfolio tracker that I use very religiously, and I want to tell you a little bit more about it. One of the most essential tools for any investor is a solid portfolio tracker, and Snowball Analytics is like the Swiss Army knife of portfolio trackers. I've been using this platform to track my own portfolio for a while now, and I'm extremely impressed by just how much insight it provides into my portfolio. As you can see, the layout is very clean and intuitive, and I found the platform pretty easy to navigate. Plus, it's packed with more charts and graphs than you can count, which speaks to just how much insight it offers not only into your portfolio, but also at the individual stock level as well. Pretty much anything you want to know about a company's financials or dividend history can be found here within the platform. Now, in my opinion, what really sets Snowball Analytics apart are the features it has designed specifically for dividend investors. I'm actually convinced that this platform was made for us, and here are some of my favorite features. First off, Snowball tells you your total returns by default throughout the platform, which may sound like a small thing, but it's crucial for dividend investors because it doesn't neglect the dividend income we receive when calculating returns. Most other portfolio trackers will only show share price returns, which really is only half of the equation, so it's refreshing to see dividends factored into these calculations. Additionally, Snowball also has a pretty robust event calendar that keeps you updated with upcoming news, events, and dividend payments. They even have a dedicated dividend calendar so you can see who's paying you each month, when they're paying, and how much they're paying. And then another favorite feature of mine is Snowball's backtest tool, which lets you see how your portfolio stacks up against the S&P or any other benchmark across multiple time periods. And once again, dividends are included in the calculations, which is awesome. So overall, if you're looking for a great portfolio tracker, which once again is something that every investor needs, I highly recommend you check out Snowball Analytics, which you can actually do for free. All you need to do is click the link in the description or in the pinned comment, or just scan this QR code right here to get a free 14-day trial. And if you like it, you can save 10% on your subscription using the code Ryne Williams. I've personally really enjoyed using Snowball Analytics, and I know you will too, so definitely check out that 14-day trial, and don't forget to use the code Ryne Williams to save 10% on your subscription. But anyway, guys, getting back to it, like I was saying, I'm stoked to be seeing the returns that I have so far this year, especially since it's helping me get closer and closer to finally hitting six figures in the portfolio. I'm so close, and I want to get there so bad. At this point, guys, I'm at just over 87K in the portfolio, less than $13,000 to go. And if the market just keeps going on like it has been, we'll be there in no time. And even just getting from 80K to here seemed like it happened in the blink of an eye. It's only been like 2.5 months since I crossed the 80K mark in the portfolio, which on one one hand, that's a great thing, right? We're building wealth and we're doing it very quickly. But on the other hand, this is a bit concerning to me. Part of me feels like when things come too easily, they can disappear just as quickly. And so with that, while 2024 has been great, not unlike 2021, it really wouldn't surprise me to see some sort of pullback next year as we saw in 2022. After the big boom in 2021, the next year brought quite a reversal. And as we can see, the S&P ended up declining by almost 20%. And this is definitely not a prediction, by the way. I'm not saying that in 2025, the market is going to crash or we're going to see some sort of correction or anything like that. I have no idea what's going to happen. Okay, nobody can predict the future, and your guess is as good as mine on where things go from here. It could just as easily go up another 20% next year. I guess what I'm trying to say, though, is that I'm kind of trying to just mentally prepare myself for anything. If for some reason the market does head south in a meaningful way next year, I want to be able to emotionally absorb that shock. Big pullbacks can be gut-wrenching, and I think that trying to be mentally prepared for whenever they do occur, which they do, can not only keep you from freaking out and selling out of your stocks, but it can help you take advantage of the great buying opportunities that will arise. In my case, I've seen a pretty decent return with quite a handful of stocks, like Visa, which I really haven't owned for too long. I'm already up 15.4% with Visa, and if we scroll down, Vici Properties is another one that I've really not held for all too long, and I'm already up 17.5%. And as much as it would suck to see these returns dissolve and go back to break even, at the same time, I plan on owning these companies for a long, long time. So I would love the opportunity to buy more shares of them at a lower price. And that's one of the great things about being a dividend investor and owning these cash flowing assets. The benefit that you get from having these investments isn't just tied to the share price. The dividend adds a whole nother dimension that's independent from that. When the share price goes down, you're able to get more bang for your buck, meaning you're able to buy more shares of these cash flowing assets for less money. Not only that, but as the share price goes down, the dividend yield goes up. So in addition to being able to buy more shares, you're also able to lock in a higher cash flow return. So with all of that said, ultimately, I'm not too entirely concerned about a correction in the stock market. It's certainly something that we dividend investors can find a silver lining in, and better yet, take advantage of. And I feel like my portfolio is pretty well prepared to endure that type of market environment. In 2022, when the S&P was down nearly 20%, my portfolio was basically break even. And, that's not to say that it will be like that during future downturns. But overall, I think I've built a pretty solid, all-weather portfolio that's able to capture some upside when times are good in the stock market, and has also proven to be pretty resilient when times are bad. And if you want to learn about the stocks responsible for a lot of the strong performance in my portfolio over this last year, then check out this next video right over here, where I'm telling you about my top 5 best performing dividend stocks. These have all helped my portfolio just skyrocket. So click right over here to learn about those, and I'll see you in the next one.